Yeah, so crude in the 50s, okay, the only way we're getting crude to the 50s, in my opinion, is we're gonna have to have we're gonna have to have a pretty decent sized recession to see crude in the 50s. Okay, and do keep in mind, if you were to see a scenario like that, obviously they could pull back some sort of production, but obviously oil prices do matter in relation to Tesla because let's be honest, I think there was definitely the higher crude prices are, right? I mean, if you go to the gas station and have to pay $5, $6 a gallon, it definitely makes you think, shoot, maybe my next car is going to be an EV, right? And so I do think whatever happened last summer is going to be a massive long-term benefit to a company like Tesla or just the EV revolution in general, because more and more folks are going to consider Teslas for their next vehicle purchase, whenever that is, whether that's 2 years out, 4 years out, 6 years out, 8 years out, whenever that is, right? And so I do think that's something important. Now, I'm not going to get too bullish in terms of assuming like crude's going to be low this summer. Remember, we're here at the end of April, and we still got to get through the summer in terms of oil prices. And generally speaking, oil prices go up throughout the summer. So don't everybody hold your horses. Don't get too excited yet. I don't want to hear any talk about crude $50 right now. Okay. If we can get through the summer, then we can talk about that. Okay. If this is September, we can start talking about that. But right now, I'm more worried about crude going to 100 than I'm worried about it going to 50, So that's kind of my thought process as far as that goes. So if I hear somebody freaking compare Tesla to the competition valuation-wise again, I'm like, my head's got to explode. Like, are you freaking kidding me? Like, it's unbelievable that I still got to listen to this crap all these years later. It's unbelievable. Okay, first off, their competition, Ford, GM, all those other companies, they're all trying to completely switch their business models to the EV wave, right? Which is incredibly hard to do. And we don't even know if those companies are going to survive. So they're not going to command any sort of bigger valuation. They're commanding on the floor valuations because no one knows if those companies are even going to be around in 5 or 10 years from now, okay? That's the first thing to understand, okay? Is those companies might be out of business in 5 or 10 years. That's a possibility. Second thing, or they might have to sell to a competitor or something like that at a cheap price. Second thing to understand is when you look at something like Tesla, you got to look at its growth rates, and you got to think about it in terms of like, where's this company going over the next 5, 10 years? The company is at a forward P right now that's in the 30s. For a company with that sort of growth, that's not high at all for a company like Tesla. With this sort of growth, a forward P of 30s is not high. If this was 150 forward P, that's a whole different scenario, and that's what Tesla's been at in many past years, right? But at a 30-something forward P, that is not a high valuation for this company. And actually, it's a really undervalued valuation. If you believe this company is going to continue to grow at a double-digit clip over the coming years, that's a very, very low number, especially if they grow double digits year after year, which I think is very possible for the next decade plus. And they grow their top line double digits, they grow their bottom line double digits on average over the years coming. Run the numbers on it. This is just math. Like it's not a high valuation whatsoever. Yeah, somebody I gotta give some respect and love to. Do you know who it is? Okay, it's a woman. It's a woman. Who's this lady I'm thinking about? I gotta give her some love here. Okay, Cathie Wood. Cathie Wood. She was the first one that I really heard talk about that on a sort of level of like this brain tree of talent that Elon Musk attracts of world-class engineers that he uses for his different companies and whatnot, right? And so I always thought she was kind of the first one that really brought it out and made you think like, wow, yeah, he's attracted this incredible talent that he can use on obviously Tesla that is talent at other companies as well, okay? I do think this is an interesting thought process around the EV revolution hasn't started. I would definitely say it has started at least. Okay, I know we might be I think we're probably in the third inning of the game. The first inning really was like Tesla launching, in my opinion, the Model S. That was really like the first inning of the game, and then the Model X. And I feel like the second inning was really launching Model 3 and then launching Model Y and getting that up to production. I feel like now we're kind of in that third inning of the game, right? Where everybody, has at least probably some EV in the market. Most aren't having any success. Tesla's really the only one having major success outside of a few Chinese companies in China, right? In terms of the EV market. But yeah, obviously long way to go, especially on the infrastructure side. Tesla has their supercharger network built out in a massive way. But these other companies just don't. and they're not going to. They're going to have to rely on others building out that infrastructure. Tesla has their service fleet built out. They're going to have to continue to build it out as more and more cars hit the road in terms of their mobile service fleet, which I've had to use several times. Over the years, I've been a Tesla customer for probably 4 years now, and I've had them come to my house for just fixing whatever needed to be fixed, whether it's a battery died, right? In terms of the just the regular battery, not the huge battery, right? Or other problems, right? They just come fix whatever issue in my garage, and that's beautiful. So yeah, in the infrastructure side, yeah, there's a lot of progress that needs to be made from the big dogs out there. Cheesecake Factory, ticker symbol cake on this one. So Cheesecake Factory, Amazon, Palantir, those represent more growth stocks, and my strategies, GVD, right? Growth, value, dividends. And Cheesecake Factory represents a dividend stock and a value stock here. Okay, great risk reward profile on Cheesecake Factory. They big dividend yield on this one. If you want to know why it's been such a tough 5 years for Cheesecake Factory, right? The stock's down 37% over the past 5 years. First off, I don't care what a stock is up or down before I got into it. It's actually completely irrelevant to me. All that I care about is where that stock's going over the next 5 years. What happened over the last 5 years is kind of irrelevant. But to explain that, because I think it is worth mentioning, right? Whether it was an Amazon situation where the stock hasn't gone just about anywhere in 5 years, or Cheesecake where the stock's actually gone down over the last 5 years, right? They got hit with Rona, which obviously came out of nowhere and just wrecked their business in the short term. I mean, it's a restaurant chain that, had hardly any to-go business, and next thing you know, their restaurants were the government forced their restaurants to be closed, along with all the other restaurants, right? So they had to adjust to that. That obviously was a dramatic situation. Then they had to deal with the highest inflation we've seen in literally decades, which is one of the worst things a restaurant could ever deal with, because then you're talking about wage inflation, and you're talking about your raw commodities, like it's devastating, right? And then the third thing that's hurt this stock is obviously recession fears, because if there's recession fears and worries about the profitability if we got into a recession or something in regards to that, in regards to Cheesecake Factory, right? I mean, shoot, if people are out of work, then are there as many people to go out there and dine at the Cheesecake Factory, let's say, for instance, okay? Now, in regards to the recessionary fears, they're not as justified as some might think, okay? And this is important to know this, okay? So in regards to a recession, it hurts their comp store sales. There's no doubt about that, right? And that goes for any recessionary scenario. But you might think this company must lose a bunch of money during a recession. Think again, okay? Look at this. This matters in a significant way. If you check out their adjusted earnings or loss per share over time, this is a company that's proven they can be profitable even in situations where the comp store sales are going down, even in recessionary scenarios, right? 2008, still profitable. 2009, profitable. 2010, profitable, right? And so that just goes to show you a company like Cheesecake Factory can do very well even in those time frames. Look at free cash flow, even during those years, right? 08, $85 million of free cash flow, $163 million of free cash flow in 2009, which was obviously a very bad year for the economy, $128 million of free cash flow in 2010. So it just goes to show you a company like Cheesecake Factory can show actually great strength, even in a, let's call it, rougher economy. And so that's why I don't worry about this one, even with the recessionary scenario. Now, in regards to Cheesecake Factory, it's not just I'm getting Cheesecake Factory as far as that restaurant chain. I'm also getting North Italia, which I think has crazy long-term growth in the United States of America. I've gone to North Italia probably, maybe 7 or 10 times now. I can tell you, food is always phenomenal. Service is always phenomenal. We got a nice location in Summerlin, and I think they got one opening up in Henderson here very soon. That I could see that being a restaurant chain that has 100 to 300 restaurants open throughout the United States easily in, let's call it, nicer neighborhoods and whatnot. So a lot of growth as far as that goes. There's also an FRC, which is an interesting concept where basically they'll experiment trying a bunch of different restaurants and trying to see what hits and what doesn't hit. And some work out great, and then others don't quite make it, right? And so that's an interesting concept, because basically they can try to find the next Cheesecake Factory, the next North Italia. And so I love that concept for long-term growth, right? Now, in regards to kind of EPS expectations and whatnot, as far as this year goes, 276 EPS expectation, trading at a forward P of, let's say, 12, based upon this year's numbers. 335 analysts had them doing for 2024. That'd put it at a forward P for 2024 numbers based upon about 10. So I'm getting an undervalued asset here. Very, very undervalued. I love this one, okay? Now, in regards to balance sheet, certainly not the greatest balance sheet in the world. Total assets at $2.7 billion. Total liabilities at $2.4 billion. Do keep in mind capital leases make up $1.2 billion of that, okay? So that is something to keep in mind there. So that doesn't make me it's not as ugly of a balance sheet in my opinion as it might seem when you see that huge capital leases number, right? So I would give them like an okay balance sheet. It's certainly no Texas Roadhouse. Texas Roadhouse is another company I personally own. Texas Roadhouse has, in my opinion, probably the best balance sheet of any restaurant chain in the world. So yeah, it's no Texas Roadhouse, but I gotta say it's still an appropriate balance sheet. I'm not worried about this one, okay? Now, here's the deal, okay? This is a 3% plus dividend yield. If they do EPS of $2.50 to $3, which they likely will in 2023, it's a very low payout ratio there, right? Which means they have a lot of room to likely up this dividend over the future years. So yeah, if I'm buying the stock right now, I'm getting a 3.2% dividend yield, but it's very possible here, folks, that based upon my shares, in future years, I'll be getting a 4% yield, 5%, 6%, 7%, 8% yield. That's a beautiful thing with owning dividend stocks is whatever you were getting to that dividend yield at first, right? Great dividend companies keep raising that dividends more and more and more. And then based upon the shares you bought, I mean, from my understanding, Warren Buffett owns some Coca-Cola shares that, before we get into my price targets and whatnot for Cheesecake Factory, it's interesting. I believe Warren Buffett owns some Coca-Cola shares that he's getting like 100% dividend on now. Basically meaning what he was buying the stock for back in the 80s, based upon what their dividend payout is now. Like he's getting basically on an every year basis what he paid for that stock just in a dividend. Like, hard to even fathom. Like imagine that, right? Just another reason why it pays to be a younger investor out there in the market, right? Now, in regards to buy prices and everything like that, in regards to Cheesecake Factory, here's where I'm at. Under $30 for me is a load the boat situation for Cheesecake Factory. $30 to $35 is a buy for me in regards to Cheesecake Factory. So that's where obviously Cheesecake Factory is right now. $35 to $40 is a light buy for me, and over $40 is a hold for me. I'll have likely bought as many shares I need to buy in regards to this one, okay? So that's Cheesecake Factory. Now let's get into the fourth of these four stocks, and then after this stock, I'll show you the four probably buys for me as well, okay?